Hey, good evening everybody, and let's have a look at silver. So I've dropped down to a smaller time frame, but let's start right at the top. Where is everything at with silver? Taking it up, this is our pattern view. This was a squeeze that we warned a while ago when we also looked at gold. Very important to look at silver and gold together. The gold had a nasty grind line which implied a break to the downside, and that silver would probably respond to an even worse level to the downside. This overall structure is bearish, as you can see. That was our traditional break. Short stops could be there, they could have been moved down to here on a variety of other levels, but generally we don't trail. The overall target down here is the possibility that we've suggested. You could even see nines. It's at this juncture it's worth reminding everybody the history of silver, and many people say it can never be, and well, that first inverted structure had a target down here that was not run, but it was not invalidated. It did what we typically say, overextend its timeline for performance. So it's not invalidated, but it would have been, I would have certainly taken off at the time stop, which was there, which incidentally was the lows. It then had a subsequently push up and then churned and squeezed again. So this would have been, once again, I suppose the concept of QE coming back out again and creating more, oh my God. So the whole trade idea was stalled. The whole original momentum for the downside setup was stalled. But not gone away. It was parked for a while, and what subsequently happened, as you can see, is we've broken to the upside and then come back down and squeezed again. So with that all said, do you expect the $9 target to be made if in the first instance the original $13 when you were up at the $20 plus levels wasn't made? Well, the $20 level and the $13 target could still be due to be made. In fact, it's getting quite close. It's at 16. $3 is still somewhere away, but if that is run, it'll be a nasty development for silver. This, by the way, is a logarithmic scale. You may remember that we were very close to $50 at this juncture when this originally happened. So in percentage terms, it's quite a terrible fall that's happening, and this recent down move is one of the worst, with the exception possibly of that selling down leg and this entire leg. It's probably one of the worst that you've had in the last 5 or 6 years. There was a nasty slap in the face there and there. This was a sustained sell-off, and that was a sustained sell-off. But this is starting to look like one, and with plenty more downside to go. This long run said and done, I would still be an accumulator of silver close to these target levels once they have been run, because it does strike me as this blow-off market has overshot our original performance that we expected. We called for $31 on the upside break, and there was a better setup on gold. We called for 1300 gold. We got 1900 plus on gold and 49 on silver. This was chronic overperformance, which begets future sustained underperformance. Almost call it indigestion in the market, because it's binged on the upside, and so now it suffers on the downside. So dropping it down, back down, you'll see we'll walk through the time frames, silver, and we're updating it. So here's a slightly more time efficient update on what I think is going to happen next. I actually think we're going to sell off. We're going to run these two very closely packed lines, and then we're going to have a little bit of a rally and a rest. We're going to be at a second interim, a major period of potential rest, before eventually likely running the 13 with the possibility of the 9. This will see a pause in the crypto bearishness, I would expect, with this confluence of levels right here. It also ties in, if we go across, always look to the left on your charting, it also ties in with the previous relative lows. So this is why, as it starts to approach the lows since the blow off high, everyone will get real excited. Excuse me. All the shorts will come charging in, expecting the retail shorts The people that should have been in short up top here and on the green level all come charging in and saying silver about to make new lows. That's a perfect time for a rally, and all that short-term dumb money gets shaken out. And after that juncture has played out, then the lower lows can probably happen. So we'll have a look at it, shorter time frame, dropping it through. It keeps creating. The amazing thing about these cycles, that once you've got a clear set idea, you just keep getting inverted HVFs, grind lines, inverted HVFs. So you saw that one, made target, overperformed, came back to the key level, failed. There was another interim. This was, of course, first interim that was made. Not exactly, let's get the line perfectly, exactly, almost on the round number there. So that was plunged through, grinded back up to the interim and the target of the other. Confluence of levels there, so you smash them and then you come back. Period of progress decay where you're not making any more profit, and in fact it's taking some back, grinding up when you're wanting it to go down, and then when it's ready it spills again. Big spill. And spilling again at the moment. So let's have a look at that particular pattern that's on a short time frame. You can see it's a little better now there. And as we walk our way down into that pattern, you'll see more and more that if we drop right down to the 15 minutes, it's actually a fairly short time frame pattern. But it has been impulsive, and it has a confluence of levels that are asking to be made to the downside. So silver will start to make headlines for being at near lows, and that's bang just at the moment as it's approaching the low since the blow off highs, that everyone will be talking about how it's only a short and they're going to get stung. That's the take. So it's going to start hitting the news waves. People are going to start talking about it. The other chart that you want to keep an eye on, guys, that is very, very interesting. Let's have a look. Let's go into XAU, and that is the number of, in fact, other way around, Francis, gold expressed in silver ounces, which is the XAG, the silver gold ratio. Now, I said last time I spoke about this is going to hit, for me, an all-time high, and it is showing that robustness for doing that. I suspect it's actually going to make 90s, guys. Yes, I do. I've said it before a while ago that this bear market for the metals is still ongoing, and this is a warning for the guys in Bitcoin and crypto. This is, since the blow-off highs in 11. Yes, these markets are slightly slower. They don't do as big in numbers, and they take a lot longer about doing them. But this is a real issue. And bears don't just suddenly stop on a dime. They can keep trundling on for a bit. So this is what I suspect has happened, and we will now see this. Now, I don't expect this target to be made, but what I do suspect will happen is we will get into the 90s into the gold and silver ratio. It's also fair to point out it's not a million miles away. I'm going to check the scaling for this chart. It's not a million miles away from potentially getting into a 3-digit number. Imagine that. You need 100 ounces of silver plus to buy a single ounce of gold. That will be very bearish for the precious metals. So it will be dull for gold, and particularly dull, like really bad, for silver. So we're sitting at 85. It's higher than this previous high. It's higher than that previous high, and it's got a kind of an all-time high. The data here isn't extending that very far back, but since the bull market, I would argue that certainly is the all-time high, and that's at 89. So a 90s call could be very strong. That said, it is starting to move a little bit more strongly and impulsively, and those kind of movements do end, but it's not yet blow-off momentum such as this, which was exceedingly steep and then led to the pullback. So let's watch and see, but bearish for silver, and I would say be cautious out there. By the way, we've got an amazing free mini course. The link is in the details below. It will be made free to all those who pre-register. We have limited numbers and slots. You'll get it. You'll have it delivered. All you have to do is pre-reg. Click on the link, drop your details in there, and as soon as it's available, it'll come out of you. That's marketsniper.com. That's our website if you want to register for the webinar, but the pre-reg for the mini course is on the link below. It's a different link. Okay, so pull the trigger on that if you want to find out more. In the meantime, careful with those precious metals. There will be chances to buy that silver for less, I suspect, but there will be a rally too, so it's a bit late to run in on the short side. It'll catch all the momentum chasers on the wrong side. Okay, bye for now.